Okay, the Federal Reserve's at it again. They're talking in front of Wall Street, and it's causing havoc in the market, but in a good way right now, fortunately, unfortunately. But if the Fed continues on the path that a lot of people are expecting, meaning raising the federal funds rate and quantitative tightening, it's going to crash the market. Okay, why? Well, let's go back to 2019. What happened? The federal funds rate was about 0.25%, and that's the interest rate the Federal Reserve controls. Well, they jacked that number up to 2.5 fast. What happened? Well, stock market crashed. A lot of companies started laying off a lot of people. Interest rates spiked. Housing markets plummeted. Okay, so hopefully they learned their lesson this time. So a lot of Federal Reserve people are coming out now. They're saying, okay, what do we plan on doing? Here's the best backdrop that I can give you guys, especially those out there looking for long-term rate locks, or you're planning on buying a house this spring. So what happened just recently is the Federal Reserve, they know inflation's going out of control, and there's a lot of elements that contributed to that. So, but they have two things that they're controlling, not just one in most cases. Normally what they do is they come into the market and they start raising rates. But in this scenario, they have that, plus they have a huge balance sheet of all these mortgage-backed securities and corporate bonds that they purchased that they got to dump back into the market. So it's basically like dumping a whole bunch of stuff for sale and then jacking up the price. It doesn't work. Nobody's going to buy. So they have to learn their lesson from 2019. They have to do one or the other. So what the expectations are, that I think what they should do is they should start selling off their assets, the mortgage-backed securities and the corporate bonds, and then see where everything goes from there, and then use the federal funds rate as a tool to make minor adjustments from that. And I think that's some news you're going to see in the next couple weeks as everybody dissects all this stuff, especially what we're seeing right now. Just today alone, we saw inflation, some piece of the market in the inflation part of it kind of drop, and that's oil or energy. Just from a ceasefire rumor between Ukraine and Russia, oil plummeted over 10%. So that's going to help on the inflation front in a big way. So the Federal Reserve has two mandates. It's full employment and to keep interest rates or inflation in check. Well, we're at a 3.8% unemployment rate. There's 6 million jobs that people are looking. So 6 million people out of work, but there's 11 million jobs. So the job market is pretty much there. Wages they're kind of stagnant right now, but they are also increasing gradually. They were about 9% last year, and you're going to say, hey, I didn't see that, but that's what government statistics are saying. So the backdrop here is if the Federal Reserve raises rates and starts dumping their balance sheet, the market's going to crash. But if they learn their lesson back from 2019, they'll either do one of two. And my suggestion is, and a lot of economists and Wall Street executives are saying this, start depleting your balance sheet and then making the federal funds rate the tweak or the adjustments. So what this is going to do for you, I'm just trying to give you some insight. We're going to monitor the Federal Reserve really close. And if they do both, if they raise rates and or start dumping their balance sheet, the market's going to be bad. But if they learn their lesson and they do one of the two, they start depleting their assets and start tweaking it with the federal funds rate, you're going to see a soft landing. And that's my prediction. So this is a quick video. I'm actually heading out of town. I'm heading to Florida. So I'll be back tomorrow morning for a quick video to give you guys the market update. And if you find value in my channel, don't forget to give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. I'll see you guys tomorrow. Bye-bye.